Avation's an aircraft leasing company. That means that we buy commercial passenger aircraft and lease them to airlines. It's a relatively simple business model. What I'll do during the speech is actually talk about the business model. I'll touch briefly on our most recent set of results. And then I'll want to spend the bulk of the talk, or the second half of the talk, really just talking about why you should buy shares now, effectively. And that is, we're a growth company, what growth we've got coming on, what the risk of the platform is, and what the opportunity is for the company going forward. So most people don't appreciate with aircraft leasing that every second plane in the global fleet is effectively owned by a lessor company like us. That means every second time you've ever flown, you've flown on a plane that's owned by a leasing company. And just because it's painted in British Airways or EasyJet's colours doesn't mean that British Airways or EasyJet effectively own that plane. So Avation is a company that's based in Singapore. Singapore give us a 8% corporate tax rate through this aircraft leasing scheme, so it's a great place for aircraft lessors to domicile themselves, and we're listed on the London Stock Exchange. So it's not a name company, it's a standard listing on the London Stock Exchange. The reason to buy the shares in this company is that it's a growth company. So historically, what we've done is we double the size of the company every three years, and by doubling the size of the company, I just mean doubling the fleet. Because we generate rent from the assets, we double the revenue, and that generally leads to increased earnings. And historically, that's been highly correlated to the share price. And in fact, if you look over the last 6 years, the share price has actually more than quadrupled, and we've quadrupled the fleet in the same sort of period of time. So what I'll sort of talk about and what I hope to explain to you is and help you understand is whether that growth opportunity is intact. Because if you don't own shares today, you want to know, well, the question that I get from most investors yesterday when I was talking was, well, have I missed out on the opportunity? So I'll talk about why we think the growth opportunity is intact, and in fact, we think it's enhanced now. And then I'll also talk about why we think the company and the platform is actually less risky than it's ever been. And so technically, it's actually a better investment now than it has been at any time in the past. So today we actually have 45 aircraft. It says 44 aircraft there, but yesterday we released an RNS advising of the delivery of our latest aircraft. So we've moved to 45. Got a very young fleet. The fleet is on average 3.6 years old, and the average lease remaining on each of those aircraft is 7.6. So an aircraft lives for about 25 years, typically has a useful life. So our business model focuses on buying brand new or young aircraft and putting them on long leases. And the way that you buy an aircraft, in terms of the business model, is very similar to buying a flat to let. You go and find your asset, which is your apartment. In our case, it's an aircraft. And typically, we'll use up to 80% bank debt to finance the purchase of that aircraft. And when we're talking about aircraft, if you think about the stuff that Ryanair flies, which is Boeing 737s, and you think about the stuff that EasyJet flies, which is Airbus A220s, they're $50 million aircraft. So we'll typically put in $10 million of equity and borrow $40 million to it. So very similar to these sort of LTVs that you would when you're buying property. The difference with aircraft leasing to property is this: the asset will generate about 12% yield per year on the asset. So that $50 million aircraft will generate about $6 million a year in rent, which is vastly superior to any sort of, that's the equivalent of buying a £1 million flat and getting £120,000 a year rent. If you could find a flat that would generate that in London, you'd buy every single one you could. And that's what we do. The only difference is the assets are aircraft. The other difference to the property analogy is this: an airline will sign a 10 or 12-year lease on that fixed rate of lease, that fixed rate of rent for 10 or 12 years. So the simple mathematics of the business model means that the aircraft will pay itself off inside the first lease. And of course, if you use, as we typically do, use amortising mortgage senior debt, you actually just pay off all the debt inside the first lease. You own the aircraft outright at the end of at the end of that first 10 or 12 year lease. And you know, the aircraft we delivered yesterday was very typical of what we deliver to our customers. It was brand new. It was a brand new Airbus A220 on a 12-year lease. So it exactly fits that business model that I just described. So the fleet's got, those fleet metrics are amongst the best in the world of companies that do what we do and show that we sort of focus on, you know, that young stuff with long leases and that have the most income producing potential. We've doubled the number of customers in the last 3 years. We've grown the customer base to 17 and the aircraft and those airlines operate in 13 different countries. And obviously what we're trying to do with the growth opportunity, the more customers you have, you know, that's repeat business. So you're looking to upsell always to your customers. So doubling the number of customers enhances the growth opportunity moving forward. We've been listed on the London Stock Exchange. The share price performance has been quite good. When we first listed the company 13 years ago, it was 4p, and yesterday I think it finished at £2.92. And as I said, you know, if you go back 3 years, we've doubled the share price in 3 years. You go back 6 years, we've quadrupled the share price, and that has just followed the growth. So, you know, that is the real opportunity. We have been profitable the whole time. We do pay a dividend, which is progressive. That has generally yielded about 2%. We've got a credit rating from Fitch and S&P, which helps, and we've been lowering our cost of debt all through the company's history as well. If we're generating 12% yield from these assets, the next important question that you should be asking is, well, what's the cost of debt that you're paying on, you know, to help finance these aircraft? Our last reported cost of debt was 4.9%. So you've got a net interest margin of about 7%. You know, if you think about banking stocks and why you buy banking stocks, they tend to operate on net interest margins of 1 or 2%. You know, banks borrow at 2 and lend at 4. You know, we borrow at 4.9 and effectively are lending at 12. That's how lucrative this business is. And we've got an experienced team that have led the business. We've got lots of people who work for Airbus and Boeing, sales team that talk to all the airlines in the world, and a finance team. And probably most importantly for the purposes of this meeting is that the board and senior management own over 21% of the company. And so we think we're perfectly, you know, we think that team is perfectly aligned with your interests. You know, we have 25 people. The cost of our admin, our office, all our travel, marketing, regulatory costs, admin, all things like that has been under $10 million a year effectively. So there aren't $1 million salaries being earned in this company, but we're all large shareholders. So we're all driven driven to improve the business, grow the business, make the business succeed, grow the share price, and that's how, you know, that's how we're rewarded. So a snapshot of the company, as I said, as of yesterday morning's RNS, this slide's out of date. So we do have 45 aircraft operating with 17 customers in 13 countries. And how we've evolved the company is that, you know, we started the business 13 years ago as a captive lessor, just serving one airline in Western Australia, which is where I'm from, where the founder is from. And then about 7 or 8 years ago, that airline was bought by Virgin Australia, and we started supplying aircraft to a national carrier. And the big company making event, I think, was that they asked us to supply them a dozen turboprops. Now, these turboprops are 70-seat ATRs. We delivered those, and that was actually a big deal for Virgin, a big deal for us, and actually a really big deal for ATR. ATR is an effective subsidiary of Airbus, and they make about 75 of those aircraft a year. So we'd put in a really large order. What they did at that point in time was come to us and say, look, the big companies, the big leasing companies around the world, and I'm talking about GE here and AerCap, you know, they have $35–40 billion balance sheets. They have about 1,500 aircraft. So when they are looking, what their sales guys are looking to do is try to fulfill a 50-plane order to Ryanair or British Airways or Delta or whoever it might be. And they're talking about the $50 million aircraft, the $100 million aircraft. You know, these turboprops are $20 million assets. So they weren't, what ATR said to us is that these big companies aren't really that focused on leasing these assets. Their salesmen want to do the big stuff. So we'll give you a unique selling proposition. We'll give you a bunch of forward delivery slots and access to this aircraft, so that when an airline comes to us and say that we want to finance an aircraft, you'll be one of the very few people who will have access to future delivery slots. So it was a unique selling proposition. So what we've been doing for the last 7 or 8 years is doing about 4 or 5 ATRs a year. And you've got to remember that these aircraft are very successful, been manufactured for 30 years, operate by 200 different airlines in 100 different countries. So we got introduced to the whole world with a unique selling proposition. That's how we built our name, we built our skill set, we started signing leases and people got to know us. And then 4 or 5 years ago, we started focusing more on jets, and I'm talking about the narrow-body jets that EasyJet and Ryanair fly, you know, the Boeings and the A320s. And now those narrow-body jets make up half our fleet. Now, it's the reason why we sort of have jumped from the turboprops or evolved from the turboprops into the jets is this. As I said, ATR only makes 75 of those turboprops a year, and the turboprop market annually only produce about $2 billion worth of aircraft per year. Whereas on the jet side, Boeing and Airbus produce $200 billion of aircraft a year. So from being a big fish in a small pond and learning the skill set to lease, we jumped into that bigger, the bigger ocean of jets. And now jets make up 70% of our fleet. And this is the evolution that enhances the growth opportunity moving forward by moving into the jet world and focusing more on that and buying more of the larger aircraft. That is what is enhancing the opportunity to grow. And in fact, 18 months ago, we moved into the very larger stuff, the wide bodies. You know, now you're talking about $100 million for minimum capex for that sort of aircraft. So that's how we evolved the business over the last 6 or 7 years. And the idea is to be able to supply not only our existing 17 customers with whatever they might need in terms of aircraft size, but have more on the shop shelf to offer all the airlines in the world when we go marketing to them. So that's why we think the growth opportunity is enhanced. I talked about the fleet metrics already. Where we sit is total asset value of about 1.25 billion, but the next couple of minutes will be really the core of what I'll tell you about the opportunity in the company right now. Between Christmas and the 30th of June 2019, which is 30 June is our financial year end, we're going through one of the biggest growth spurts in the history of the company. And growth has always led to, growth then leads to revenue, earnings and share price growth. And we've already delivered 4 aircraft since Christmas. We've including the one that we announced yesterday. We'll have at least 3 more to be delivered by 30 June. And that is somewhere between $200 and $250 million of aircraft. And as at 31 December, we had about 1.05 billion. So that'll take us to about 1.3 billion. You're talking 25 to 30% growth in that 6-month period. And if you think about the nature of these aircraft and the rent that they deliver, the aircraft that we delivered yesterday is only going to generate rent till 30 June for about 6 weeks. So it's not actually going to make a big difference to the P&L for financial year 2019, but it's going to deliver a year's worth of revenue and profits for financial year 2020. So the signal to buy shares in the company is when we're buying aircraft. And then you allow those aircraft to generate revenue and profits for a year, and you see the uplift in the revenues and profits. And so that's the growth that we've got coming in the next few weeks. So it is very timely to think about this right now. And if I jump to this slide, I'll tell you why that's important, because historically this happened before. The next largest growth spurt in the history of the company was in about October, November in 2017, where we increased the fleet by about 35%. And then, of course, if you look a year later to our half year, so that's to the half year, 31 December 2017. If you look to a year later to the 31 December 2018 half year result, you see the revenue jump 40%. And the share price sort of grew when we released these results. But the message that I'm saying is that you knew that was going to happen. The market should have known that was going to happen. It shouldn't have waited until we released the result. It should have started buying shares when we started adding aircraft into the fleet, because you know that those aircraft have got long-term contracted revenues. So why do I sort of say that this is a growth company and where do we come from? This is a slide that shows 3-year snapshots of how we've grown the fleet, grown the assets and grown the revenue. You see that the fleet numbers have almost doubled every 3 years. You'll see total assets doubling every 3 years. Highly correlated to the revenue, and if you overlay the share price to those charts, that's what the share price has done effectively as well. And so by us growing the company by 20 to 25% in this 6-month period, you'll see the same thing happen in the financial year 2020. So these are the results that we reported most recently. I talked about the 40% revenue growth, which was driven by 35% growth in the fleet to 31 December 2017. The same process is exactly happening now. Now, what that led to is obviously increased in profit. We doubled the profit after tax, we doubled the EPS, and the share price obviously responds to that. Importantly in our business, as I said, we continue to lower our cost of debt. So these 12% yielding assets, our cost of debt is 4.9% and coming down further to 30 June this year. So it's a 7% sort of net interest margin.
Okay, so I just wondered if you reported the run rate of revenues with your results.
Yeah, well, perhaps the run rate right now is about $11 million a month, but with the growth that we've got coming, it'll be almost $12 million a month in revenue. And compare that to the analyst reports that are out now, and I'm happy to tell you as well, we expect to report just around about $119, $120 million in revenue this year. So if we're at almost $12 million a month by 30 June, you've got a good indication of the revenue uplift for financial year 2020. And this isn't speculative. This isn't what we hope. This is planes that are delivered, have contracted revenue, and will earn that money. And that doesn't include anything that we buy in between 1 July and 30 June 2020. Or 2020. So, we sort of think that you should be thinking about that number as the bottom end of the scale rather than the larger end of the scale. So already this year we've delivered, well, it's become 8 aircraft now because this contract for 4 Airbus A220s to Air Baltic we've now completed. We've announced recently that we've got another, this is part of the growth that's coming, we've got a Boeing 737-800 that's on lease to Garuda. That's not the Boeing 737 MAX that's in the news, it's the older version. In fact, the older versions and in fact all the Airbus equipment in our fleet, because of the problems with the MAX, is actually, people are talking in our industry about all the values of that equipment going up, lease rates going up. So it's actually enhanced the value of our company. And we also recently announced a new aircraft going to Cebu as well. So we sold 1 aircraft. There's 2 risks in our business. The 2 key risks in our business is your airline customer going bust. The way to mitigate that risk is to diversify your customer base. And as I said, we've doubled the number of customers in the last 3 years. And you don't want too much concentration with any one particular customer. The other way to mitigate that risk is buying the most popular types of aircraft. So if you do have to repossess, you can either sell that plane or redeploy it to another airline. And of course, because this is an asset-backed play, you want to have confidence that the book value of our equipment is realistic. The great thing about selling an aircraft is that it gives you a sense of liquidity of our equipment and it gives you a sense of value in our equipment. Now, if you look in our 31 December 2017 results, you'll see that one particular aircraft, which was an Airbus A321, which is about a third, represents about a third, the Airbus A321s are about a third of our investment in aircraft. It's the biggest type of aircraft, or the biggest investment in any type of aircraft that we make, represents about a third of our balance sheet. That plane was in our book, it had a book value of about $48.7 million, and we made over a $5 million gain when we sold that. So what that suggests to you is that the book is actually undervalued compared to realisable value. And the company's trading at book value right now, so we think that there is real uplift in the, we think that what it helps investors to do is sleep well at night. The reason why you buy the stock is because we're going to grow the stock, and we're actually delivering that growth as we speak, and we're going to continue to grow the stock. And I'm quite happy to tell you that our intention from today is to double the size of the fleet. And why do I say this with conviction? Because we've quadrupled the size of the fleet since I've been working, this is my 7th year with the company, and in that time we've doubled the fleet, then doubled it again. So our objective remains the same. We've increased the customers, as I said. We've borrowed some money and lowered the cost of debt. We got credit ratings upgrades, which does suggest that the platform is less risky, but I'll talk about the risk in the platform in a couple of slides' time. The airline industry, fundamentally, why is our business so good? And fundamentally, the reason is this, is that the global fleet doubles every 15 years. So there's huge demand for aircraft from airlines. People are travelling more than ever. That is driven by the creation of hundreds of millions of middle class. You see this obviously in China, all through Asia, Indonesia, Malaysia, India. You've got passenger growth year on year of 20% in these countries. You've still got growth in Europe and the US. And in fact, the way that with the commoditisation of air travel, as we've all seen over the last sort of 20 years, you've got low ticket prices forever. Air travel is accessible to more people than ever. When you create hundreds of millions of middle class families in China want to do what middle class families in England want to do, which is take their families on holidays somewhere exotic every year. And you need a plane to do that. So that's what's driving the sort of demand side for aircraft. And the supply side is a duopoly. It's Boeing or Airbus. They produce 99% of all commercial passenger air traffic. And if you look at their growth rates in supply over the last 20 years, it's about 5% a year. But the growth in passenger numbers last year was 6.5%. It's forecast to be 6% this year. So so it's a fundamental supply and demand equation in that you've got a duopoly supplying the aircraft, you've got all this growth coming. So you ask yourself, why is this business model generate such better returns than the real estate model? It's that fundamental supply and demand economics where Airbus and Boeing effectively haven't been able to keep up with the growth in passenger growth. And because of that, airlines have shifted to a business model that supports leasing more. 20 years ago, 1 in 8 planes were leased. Today, it's almost every second plane is leased by airlines. And so what the airlines have understood through the commoditisation of air travel, through the use of buying big technology or big data and technology to buy a ticket. You buy a ticket on your phone nowadays instead of going down the high street. Is that what they've worked out is if they can get a plane 2/3 or 70% full, that's bums on seats. They can afford to build that route, start that route, and that supports leasing aircraft. And it's very difficult for a large airline to fund its own growth through buying its own aircraft. A reasonable sized airline's got 200 aircraft. If on average those aircraft are worth $50 million each, that's a lot of capex. And so airlines don't have that money, or historically haven't had that money to be able to support it, which is why leasing companies are used more often these days than they were previously. So that's what our current fleet looks like. As I said, evolutionary, we did a lot of these turboprops, and we still will look to do 4 or 5 of these aircraft a year, but they're $20 million assets. And now that we've got a $1.3 billion balance sheet, they don't move the needle as much. So half of our fleet are the narrow bodies here. As I said, the biggest investment is in the A321. All of the aircraft on that page, except for the A220, which is a new technology aircraft, have been in manufacture for 20 years. They're very popular, they're very successful aircraft. This is our business model of buying aircraft that are very popular with the airlines and mitigating that risk of airlines going bust and mitigating the risk of us not generating rent on those assets. And then, as I said, we've started doing the wide-body stuff as well. And jets make up 70% of our fleet. Unlike other lessors in the world, we don't have a big forward order, but we don't actually have any forward orders for jets. And we do that with the ATRs, and that's a relatively small commitment. These 12 orders here are over the next 4 years. So orders are growth, but they're also financial commitments. And if you look at if you get any analysis or research, you look at the other big lessors in the world, they have got orders for hundreds of narrow-body aircraft. And that means they've got to raise billions of dollars in capital to fulfill those, and they've got to find the customers for that. We've been able to grow our fleet and get to 70% jets without having that forward order commitment. And that is one of the ways that we think our business is more cautious and conservative than the other lessors out there. In fact, most of what we do is mitigating the risk of our business. We don't take currency risk because if we'll rent a plane in US dollars, we'll borrow debt in US dollars. We can do if we rented a plane in euros, we'd borrow in euros. 97% of our debt book is at fixed interest rates because we've got long lease terms, 7.5% on average, 7.5 years average lease term. So we don't speculate on what future interest rates are going to be. And of course, if we were at floating interest rates, the company, because they're lower, the company would be more profitable. But the company still makes plenty of money and grows very successfully and mitigates that sort of risk. And if we get a 10-year lease, we'll get a 10-year piece of debt. So there's no overhang in that regard. And as we've bought planes, the business model for us, as I said, is focusing on buying young stuff on long leases. So you'll actually see the age of the fleet come down as we keep delivering brand new planes on long leases. And this means that the quality of the fleet stays strong. You've got lots of visibility of earnings, and that and the value of the equipment is very high. And obviously, airlines all want to use the latest and greatest stuff. And so having new planes means that you've got very popular aircraft as well. And this is the list of customers that we have. So we've doubled the number of customers in the last 3 years. There's lots of household names that you'll know there, including EasyJet, Air France, Thomas Cook and Flybe in this country. We have a number of flag carriers as well, including Air France, Air India, Philippine Airlines, Eva Air. And we get about 1/3 of our revenue from Europe, 1/3 from Asia, and 1/3 from the Australia Pacific region. And we'll look to keep adding customers as we continue to grow, because not only does that diversify your revenue, but it provides, we obviously try to upsell or do multiple plane deals with our existing customers, and we see them as a source of future growth. And this is, I mentioned at the beginning of the talk, why we think the growth opportunity is enhanced. We've got more customers to sell to than ever. We've got more diversified fleet than ever. We can do turboprops, we can do narrow bodies, and we can do wide bodies. So we think that growth opportunity is intact. This slide explains why we think that the company is actually less risky than it's ever been in the history of the company. And this shows a snapshot over the last 3.5 years of how we've more than doubled the number of customers. And you've got to remember, this pie chart here on the right is actually double the size of that. At this period of time, we're generating about $5 million a month in rent. As of April, we're generating $11 million a month in rent. And as I said, with the growth to June, that'll get closer to $12 million a month in rent. But you see that we've doubled the number of customers, and we've added in new wedges to this pie. And of course, that diversification and deconcentration of the biggest customers is what lowers the risk in the platform. So the company is actually far less risky. If any one particular airline has a problem, it is far less of an issue for us than it was back here. So that's why technically we think that the investment opportunity is better today than it was 3 years ago. And if you had bought 3 years ago, you would have doubled your money. So I sit here today saying we've got the growth happening right now. 2020 is going to see a large uplift in revenue. We think the platform is less risky, and so that's why you should buy shares now. And this is the simplest chart, and it shows that growth history. It shows us doubling the fleet every 3 years, and it shows where we'll be at the end of 30 June. So you see that you see that profile continuing, and if you overlay a share price on that, there's a very high correlation. So this is the skill set that leasing companies have. So our 25 people know how to buy planes, lease planes, sell them, finance them, repossess them if we have to. We've had to repossess 2 aircraft in our 13-year history. The 2 times that we've had to do that, we've made a profit doing it. And we've repossessed typically within 24 hours of default. You need to be aggressive asset managers. And then you need to think about the customers that you can redeploy or sell those assets to. And each time we've done that, we've made a profit, as I said. The most recent one was we had an A320 with Air Berlin in August 2017. That aircraft ended up with EasyJet. So we got a better customer out of it. But most importantly, we actually made $3 million profit during the transition, which we reported to 31 December 2017. So I'll finish the presentation just with a summary of what's happening right now. We've got immediate short-term growth, and this is one of the biggest growth spurts in the history of the company between Christmas and 30 June. The airline industry is doing extremely well. You know that millennials are travelling more than ever. You know the creation of the middle classes all throughout the world is driving a 6% annual passenger growth, which is double global GDP. And it's in fact been double global GDP for longer than I've been alive. So this is the fundamental demand for aircraft. We've got a very young fleet with long lease terms. We've diversified our airline customers and our aircraft types. We've evolved our debt capital structure, and importantly, we continue to lower our cost of debt. What we're evolving the company to be is to look like one of these large lessors. The largest lessors have $40 billion balance sheets with 1,500 aircraft. Now, I'm not saying we're going to be there anytime soon, but we can supply everything that they supply. We are increasing our customer base. And what we're doing as well is evolving our debt capital structure. 4 years ago, we were a B- credit. Today, we're a double B- credit. And 4 to 5 years out, we look to go investment grade. What the big leasing companies do, they never have to take a mortgage out on a plane. They just issue a investment grade bond at 3.5%, and that's their cost of debt, whereas ours is 4.9. And so as we improve our credit rating, we'll continue to lower our cost of debt. By lowering the cost of debt, it means we can compete better with them on price. So as we evolve into the future, we're going to be able to compete with them and enhance that growth opportunity even further. That's why we think that we can double the size of the company, not only from where we are today, but then double it again and double it again as we've done in the past. And finally, what helps you sleep well at night is that you know that the book value of the aircraft, and we're trading at book value, the book value aircraft is below the realisable value of the aircraft. And we proved that through the sale of that Airbus A321 in December. And we think that realistically, if we sold all the aircraft today and returned all of those funds to the shareholders, you'd probably end up with £3.50. It's £2.90 stock today. So, that's not, as I said, it's not the reason to buy the stock. You buy the stock because we're going to double the fleet, double the revenues, and we expect to generate a much higher share price than that. But it does provide you with some comfort that the assets that we own, that we use to generate revenue, are liquid and are undervalued. Anyway, thanks for your time. That's all I've really got to say. I'll take any questions or any further questions.
Yeah, Richard, how many planes have you got with Thomas Cook?
We have 2 planes with Thomas Cook. So if we look at the fleet list, two of the A321s that we have, so these are 3-year-old planes. Probably the most popular aircraft on the planet. So I know Thomas Cook's been in the news, obviously. Even yesterday there was talk about losses and the share price dropped a little bit. We're completely comfortable with our exposure with Thomas Cook. The reason for that is it's the most popular type of aircraft going. It's in a great jurisdiction. You also know the news about Thomas Cook that Lufthansa have already bought the subsidiary airline Condor, and they've got an option to buy the Thomas Cook airline. And I think Goldman Sachs are out there looking for purchases for that airline. In the instance where Lufthansa ends up buying Thomas Cook's Lufthansa is our customer. It's actually credit enhancing. And in fact, the debt that we have associated with those once Lufthansa if they become the head customer, we'll actually be able to refinance those planes at a lower cost of debt because the banks look at the airline customer. So that'll actually be credit enhancing for us and will produce future profits for us. And of course, if it all turns to worms and the worst happens, which we don't think it will, we are reliant on the asset when we know that asset's easy to deploy elsewhere. And
can I just ask about when you talk about getting to credit rating at sort of investment grade, what sort of size would you have to be and how long might that take? I mean, what sort of timeline is it?
Well, it took us 4 years to get from B- to double B-. You know that investment grade's triple B-. I think it's a 4 or 5 year journey at least. It'll probably require us doubling and sort of maybe doubling again. We've seen a company this year go to investment grade with about $4 or $5 billion in assets. But the credit ratings agencies have told us they're looking for scale, that's growth, diversification, so that's more customer, all of which we're delivering, by the way. But they also have some metrics which we're complying with as well. But they also want to see you use more unsecured debt. Now, we've got unsecured debt out in the marketplace right now. A third of our debt stack is our bonds at 6.5%. Now, I told you our average cost of debt's 4.9%. That's because the other 2/3 of the debt stack is senior debt that's at about 4 or below. And in fact, the latest senior debt that we're getting has got a low three in the low threes. So we lower our cost of debt by doing a little bit more senior debt, and that's how we'll continue to lower the cost of debt. But as our credit rating, and if our credit rating improves, and we think it will, you'll be able to refinance or future high yield bonds at a lower, lower than 6.5% coupon. So that's the evolution that we're talking about over 4 or 5 years, and that's how we eventually can compete better on price and start looking like the largest lessors out there.
Yeah, obviously you say about keeping doubling and doubling and doubling.
Yeah.
Just wondering, it's quite a simple question actually, because you've got 17 customers now.
Yeah.
I was just wondering how many carriers there are out there that could be your potential customers, really.
There are 700 airlines on the planet, but only 200 of them have got, I think, a better than a B- credit rating. So they're the ones that we're sort of focusing on. So it's a big world out there. To give you an idea of the size of the opportunity, Boeing and Airbus produce between 1,700 and 1,800 brand new aircraft a year, worth about $200 billion. On top of that, there'd be 500 or 600 aircraft that are bought in the secondary market. That is airlines selling their equipment, or big lessors selling, when they win the big deals, like the 50 plane deals with Air France or British Airways or Ryanair, they sell down some of their concentration, and we're great buyers of that. In fact, that's how we've bought all our jets, by either buying them from the airlines or buying them from other lessors. And so there are about 2,500 opportunities a year to buy aircraft. And you're talking of somewhere between $200 and $250 billion worth of transactions a year. And we sit here today with under $1.5 billion worth of stuff. So you see how small we are in comparison to the total market. So the money that's needed to invest in this sector, the money that's needed to finance aircraft, and the opportunities per year are enormous for a company like us. And what effectively we see ourselves as bespoke investors. We look at that world of opportunity, we'll assess maybe a couple of hundred of those planes, we'll set prices on 50 that we'll bid on, but to grow at 30% a year, we only need to win 5, 6, 7, 8 aircraft. So there's a huge amount of opportunity, and we're able to keep our strict investment criteria, which includes not only just the lease yield, but the term, but obviously the credit quality of the airline, the jurisdiction that it flies. We look at the engine type, the seat configuration. We look at the popularity, look at what we can do with that aircraft. Is the credit of the airline improving or is it declining? So we're able to maintain that strict investment criteria and grow at these high rates just because the supply of aircraft is so huge per year.
Okay, I had no idea about that scale, to be honest.
And the fundamental, as I said, the real reason to invest in this sector, in this industry, in our company, is because that demand-supply equilibrium that isn't met, where Boeing and Airbus, their backlogs, your waiting time to buy an aircraft has gone from 4 years to 7 years. And that just means they're not keeping up with the demand for aircraft, that growth in passenger numbers. And that's the only reason these assets generate 12% yield. It's that it has to be. That has to be the answer. All right, thanks for your time, everybody.